Welcome to another Tax Talker. Thanks for clicking. Highly topical topic for you today, the electric vehicle credit. This was one of the big losers from the One Big Beautiful Bill passed in July. This credit was going to be available until 2032, and now it sunsets as of September 30th, 2025. That's right, we're inside 30 days until that thing sunsets. And if you've been anywhere near a dealer selling these things, you've probably heard that date. There's a lot of information out there, and salespeople at the dealer got to make a living too. And their best interest is to convince you to buy a car by September 30th. But there's some essential things you got to know about how this credit works and how this September 30th deadline is going to work. So let's get into it. First off, you got to make sure you qualify as a taxpayer. That basically comes down to income limitations. Nothing has changed here. This is still applying from the Inflation Reduction Act in 2023. $300,000 married filing jointly, $225,000 head of household, or $150,000 single. These are modified AGI. 99% of the time, that's just going to be your adjusted gross income. But that is important. That's not taxable income. Which is after deductions. This is adjusted gross income before deductions. Do take note, this is an income cliff. It's not a phase-out range. So if you're $1 over, you are out of the credit. And the IRS lets you test eligibility based on the year you acquired the vehicle or the prior tax year. So you can actually go look at your 2024 return. If you're thinking about doing this in 2025, look at your 2024 return, line 11, adjusted gross income, look at those limits. That's really going to tell you whether you're going to qualify or not. And if you're already below the limits for 2024, you are golden on those limits. So that's the taxpayer side of qualification. Now let's talk the vehicle. Starting just with the MSRP, the total sale price has got to be for a truck, van, SUV, that's got to be below $80,000 or $55,000 for a car, a sedan. In order to qualify, the vehicle also has to meet a range of requirements related to American assembly, battery components, and mineral requirements. These have not changed with the One Big Beautiful Bill. This was passed in the Inflation Reduction Act, so in practice, dealers are going to have it dialed in on whether these vehicles qualify, but know that those are out there. It is possible for you actually not to get the full $7,500 credit for a new vehicle or $4,000 used. Based on those, there are certain vehicles falling below, but the vast majority, it's going to be either you qualify or don't qualify. For you as the buyer, it's essential for you to get the time of sale report. That's the documentation that got filed with the IRS that the dealer sent, and then that's also your assurance that this vehicle qualifies. Now, importantly, if you don't get this vehicle report, or it's not actually due to you until you take possession of the vehicle, but as we'll talk about later, you could have purchased the vehicle but not have taken possession of it by September 30th. So if you really want to make sure you can qualify, check the link in the description. The IRS has ways you can look up the vehicle identification number, the VIN number online to just double check that your vehicle qualifies. But at the end of the day, once everything's said and done, the documentation for your records is that time of sale report. Now let's talk deadline. IRS loves a good deadline, September 30th, 2025. Typically, tax law works on placed into service, meaning the taxpayer actually took possession and is using the asset for its intended purpose. That's not the case here. We got guidance as of August 21st from the IRS saying that acquisition for purposes of this September 30th rule is going to work a little differently. Is going to mean that you have a written binding contract and have made some sort of payment on or before September 30th. That payment can be a nominal down payment amount and or the trade-in of a vehicle. So this does ease the burden a bit, as you can have a bona fide contract and have acquired the vehicle for purposes of qualifying for this credit, but not take possession for weeks or even months afterwards. And again, going back to the point originally, you probably won't get that time of sale report until you actually take possession of the vehicle. So again, if you don't have that time of sale report, definitely want to get it eventually for your records, but you can double check everything's going to work smoothly by looking up your VIN number online. Now there's also the transfer or instant rebate. If you've been at a dealer and they've talked about this, You might be a little confused with what's going on, but this is another area where nothing's changed and it's still an option. But basically, you're getting an advance on the credit. The dealer can knock off the $7,500 for a new vehicle or $4,000 used from your vehicle price. And the dealer has a mechanism for getting that money back on their end. But for your purposes, it's really important, because I've seen a few taxpayers burdened by this, is that you're not out of the woods yet. You still need to apply and reconcile the credit against your actual situation, because the dealer has no idea what your income is for 2024 and 2025. So if you got the advanced credit, you will then, based on income limitations, need to prove that, yeah, you qualified for the credit when you file your tax returns. And if it turns out you're a single taxpayer, made $175,000 in 2024, $200,000 in 2025, you're going to be out of luck, and you're going to have to repay. You're going to have tax liability of $7,500 or whatever credit amount you receive from the dealer owed to the IRS when you file your tax return. So the bottom line, if you're dealing with a pushy salesperson, they are correct. September 30th is a hard deadline. You need to execute a contract and make some sort of payment or trade-in by September 30th to qualify for the credit. And when you take possession of the vehicle, make sure you get that time of sale report. That's what proves to the IRS that you have this credit. That is the Tax Talker for today. If you like this, be sure to like, subscribe, leave a comment, and let me know what you'd like to see covered next. Thanks for watching, everyone. We'll see you next time.